Finish up your wish list for Santa Claus this year. What do you want?
Another magazine.
No, not going to get that. Hey, why not include a rally on Wall Street?
Well, joining us this morning for why this would be a very good thing for everyone is our financial consultant, Andy Barkate. Good morning, Andy.
Good morning, you two.
Should that be at the top of our Christmas list?
Well,
Santa Claus rally.
If you've dealt with the stock markets the last 5 or 6 years, I think it'd be really on top of your wish list this year. But
let's explain what that is to people.
Okay. Well, first of all, the Santa Claus rally is the term that Wall Street's given a year-end rally.
Okay.
Now, we get it most of the time. We don't always get it, but nonetheless, we may have already started that rally. Last week, if you remember, the markets were up over 7%. And yesterday, they were up a little. This morning in futures trading, it looks like we're going to open up a little higher also. So we may already be in that midst of doing it.
Okay.
But do we deserve one? And if you want one, what needs to happen to have those things happen?
Okay.
I mean, why should we get this rally?
Okay,
well,
why?
If you look at it, then if you believe the rally should happen, you've got to believe that our economy is getting better, it's not getting worse. We're not going to fall back into that double-dip recession that a lot of people talk about.
Right.
You also got to hope that Europe is actually going to figure out a problem to their ills, and there's more cracks are surfacing over there as we speak. But then again, you got to believe that that's going to get better instead of get worse. Corporate earnings, they've been very good. They were up 23% year over year. That just came out for the end of the third quarter. You've got to believe that's going to continue to get better, and it's justified to justify the price of stocks being where they're at. A lot of things good are happening out there, but there's still a lot of fear, and then again, the market still is rallying. But there's a lot of technical reasons why in some years we get this churning towards the end of the year. There's a lot of tax selling that goes on for individuals as well as large portfolio managers. Right. You also have a lot of window dressing, which is a phenomenon where it's kind of the term that everybody gives it. Portfolio managers show their returns to their investors at the end of the quarter and the end of the year, and they also see the holdings they've got in their accounts. Well, they move these holdings around to try to actually look a little bit more clean and pristine when they present their portfolios to their investors. So there's a lot of moving around there, but so far things have gone pretty well. Let's hope this thing continues. And we're going to not be gloom and doom anymore for the rest of the year.
Good.
It's always going to be glass half full every Tuesday morning here.
All right.
Appreciate that.
Sounds good.
All right, very good.
Andy, thank you so much for joining us. Some great tips as we move forward toward the new year.
Thank you.
Let's hope it carries over.